everybody, and welcome to Masters of Real Estate. My name is Mathew Owens, and today I have a special guest, someone that I've known for years, named David Phelps, that runs a group called Freedom Founders that actually helps people to get out of the rat race, create financial freedom in their life through different investment strategies. So, I think he adds a ton of value to the actual real estate space and the investment space. So, thanks so much, Dave, for coming on the line today and talking to us about all the things real estate, financial freedom, economics, all that type of stuff. So thanks for coming. Can you give us a little bit about your backstory, man, and how you got started in real estate investing and what you did prior to that?
Yeah, well, actually, I got started in real estate investing before I did anything else of any real consequence. I was a student, like most of us, and I was in college way back in the dark ages of the '70s, Matt. Stagflation, Jimmy Carter. I know I'm probably hitting bells with a few people that are my age, but yeah, I was going to school to eventually go to dental school to become a dentist, right? Because that was the road to stability, right? A respected profession, and you can make good money with your hands and your brain. It's like, okay, well, I can do that. So that's the path I went down. But while I was in college, I was always curious, and I always had a curiosity. I don't know why. I was had a curiosity about making money. Not that my family was like poor or couldn't put food on the table. Had hardworking parents that did us well, but I always wanted that the ability to understand how can I make money. And probably in my head, even though I hadn't figured out what an investor was or investment was or how to make your money work for you, it was always in my head. Because like all of us, I always had the odd jobs, going through high school, and because I always wanted extra money to do the stuff I want. I want the better stuff. My parents wouldn't give me the better stuff. I had to go make the money. So as in college, I was reading books about investing money, and I got hold of some books on the financial markets. I think back then, I think that was the late '70s. I think mutual funds were on the table. They just passed the law for the ERISA for 401ks, and there's some new things coming out at that point on IRAs, individual retirement accounts, and I think just hit the bandwidth about 75. So all this was like new. And then I found some books on real estate. And when I compared and contrasted the two, it's like, well, this real estate, this tangible asset, just makes a lot of sense to me. And this other stuff, it just didn't really engage me. Like, reading tables and trying to figure out, the ins and outs of what funds to buy. That's not sexy at all. It's like, I like something I can see, feel, touch. Now, even though I hadn't invested any money with anybody, I knew what a house was. I'd lived in a house, right? So okay, I got to get this. And I read the books and I go, well, this makes sense. All the attributes that we know real estate provides, it was in, the basic books back in the '70s. So I talked to my dad. So I started my first year in dental school in 1980.
Okay.
And I talked to my, I know you're laughing, 80, how old is this guy? Really? Come on. It's like, I know that's what you're thinking. You have to say it.
I don't know what you're talking about, man. I have no idea what you mean.
So I was thinking, I read these books about real estate. Well, you have to actually, own some real estate to actually get in the game. So how am I going to own some real estate when I got no money? I got student loan debt like everybody else does. I got no credit. No one's going to loan me any freaking money. So I went to my dad and said, hey, Dad, guess what? I got this great idea. We need to own some rental property. And thankfully, he goes, well, let me show you what you got. So anyway, long story short, through work and effort and time and looking around, we did find a property that made sense. It worked out. And again, you go by the standards of location, buy a property that is a great great neighborhood, but is devalued by certain aspects of not terrible shambles, but could be renovated relatively easily. Let's put it that way, and then made habitable quickly, so that it's actually producing some income, which is the whole idea behind tangible assets. So, long story short, got that done. I learned how to be a good manager, and 4 years later, when I graduated dental school, I was moving further away, and so, well, I got to sell this great asset, but we split about $50,000 in long-term capital gains, which was way more than all the money I made waiting tables nights and weekends. I'm going, there's something about, well, yeah, it's like, seriously, after the government stole from my tips, and everything else, and I had this long-term capital gain asset where in my tax base back then, I paid like next to nothing, so I got to keep almost all $25,000. I go, this is amazing, this is amazing, and so I never stopped. So yeah, I graduated dental school. I went into dentistry. I was an associate for a few years, so I didn't have to have a business or a practice to worry about, because I probably shouldn't have been having a business to worry about then. I was trying to get some skills going, but I took my $25,000 and just levered the heck out of it into more properties, residential stuff, right? Duplexes, fourplexes, single family. And I did it all by, because I learned through great mentors, how to create terms, how to buy on terms from other people. I took loans, houses subject to, I got, terms on the rest of the equity. I mean,
Awesome.
then eventually I would bring private capital investors in when I needed cash to buy something down where I could pay the investor, a higher rate of return. But then obviously I'm getting so I learned how to put together deals, and I just built up this portfolio, nothing fast, nothing fancy, over the years. And I say that over about 15 years, and really got to the point where, because I snowballed down the debt. That was my whole goal. I'll take the money from the practice. No 401ks for me. I'm just going to pay down this debt on the property, and just snowballed it, right? So after 15 years, I had a bunch of properties that were paid off. It's like, money's coming in. Like, yeah, it's not passive. You still have to, it's
still work,
still hands on.
Rentals, yeah.
But it was money that I didn't have to go to work for. I mean, go to an office and go to work for, right? And there's something about, as we all know, and with the people we talk to, there's a lot of freedom when you're not tied to, my schedule to a location where it's trading time for dollars. So I'll stop there. I mean, there's obviously more to the story, but I'll just give you, that's some of the overriding color.
That's, that first deal, you made the 25,000. They call that real estate crack, because then you're hooked forever on that stuff right there. All of a sudden, you get this windfall of money, and you're like, oh, wow, that first big check that you get from a flip or, long-term capital gain or something like that. Also, I think equivalently, the first consistent cash flow stream you develop as well, mm-hmm. whether that's rental properties or notes or, syndications or whatever the system is that you're focused on getting that cash flow, or even businesses and stuff like that. There's so many ways of making money. It's insane. But being able to develop that passive cash flow stream, or as passive as you can make it, is key. And, with managing rentals, you have to hire an asset manager and you do 10 times less, right? It's mm-hmm. how do you build a little more so that you can just cover that and put someone in place to do all that workload, right? And now with AI now and stuff, it's going to get easier and easier and easier to be able to automate a lot of these systems in place. And we're utilizing a lot of that now ourselves with our own deals. But I really feel a closeness to your story there about, building that up. I kind of, did the same similar thing where I started focusing on, I got to start building cash flow streams. And I was working at a CPA firm, but I was bored out of my mind going, I can't do tax and audit and help the government steal our money more and things like that, and, granted, I'm trying to help the people not pay, but, at the end of the day, I was just miserable doing that work. It wasn't my personality. And I read Rich Dad Poor Dad, and I'm like, oh crap, I'm making the wrong type of money. This is horrible. And I jumped ship in 2006. So I was a real estate genius for a year and a half before I got my ass handed to me and everything destroyed, and thought I was the shit, and realized I am not the shit, So, and, you take those types of hits, and there's got to be a lot of trials and tribulations that you went through in this path. Your story makes it sound easy because you're trying to get from beginning to end, but, what were some of the things you had to learn along the way, as far as operations go or headaches go with regard to buying rentals or investing in different strategies that you had to make sure that you knew well, or you're like, oh crap, that's a big learning curve, to help other people kind of maybe avoid those mistakes that you saw along the way?
Yeah, well, first thing I'd say to, and I didn't do this. I mean, I was learning from some good people, but I think if you have, if you can find someone who can be a mentor, or you're part of a group that gets together and talks about this stuff as you're growing, oh my gosh, you'd save so much time and trouble, because just trying to reinvent a wheel that's already been a path that's already been created. Other people have done it, but you have to talk about stuff. You can't just you can't go to YouTube, or I had to actually go to the library and read books back then, but there's no YouTube. But you need to be doing it kind of with other people, or some way. So that's the number one thing, which I didn't do. So I had to kind of go through the school of hard knocks, which there's always going to be some, as you said, it's never perfect, but that's how you learn. But I would say, and you know this very well, Matt, but real estate, it's a hard asset, but it's a people business. Yeah. So all the aspects of learning how to talk to people, negotiate, whether you're on the buy side or sell side. I mean, there's such an art of that. So you learn how to do that better. When you're determining what's the asset you want to buy, well, do you buy the cheapest one because on paper it looks like the ROI is going to be? No, because when you buy those cheapos in the wrong part of town, we both know that that's just a spin to the bottom. You're just you
Right.
got turnover, you got problems with the property. So identifying the
More
right
vandalism,
property,
theft,
yeah,
more, yeah, there's all kinds of
yeah,
problems.
it's all the right property. Then obviously when you're first starting out, you don't know anything, and my hands are only good inside someone's mouth because I was a dentist. So working on properties wasn't my forte. So I had to hire retail contractors. We learn really quickly. If you paid retail, you're not going to get very far with that. It's going to kill your NOI.
Right.
Again, it's through a network. It's finding people and finding the right people, and I think that's probably the biggest thing. Is just like, don't do this stuff by yourself. Find
Yeah.
other good people that are teaching, that are authentic, and pay the tuition to get in there, and that's going to get you further down the road than anything in the world.
Yeah, I tend to agree. When you're looking at, an operational aspect of this, of a real estate business, and you're looking at buying rentals, doing rehabs, negotiating with sellers, selling properties, having, pulling in the right inspectors, the right contractors, the right property management team, all of those things are what make or break you. And also your ability to mitigate risk within those different relationships, like your contractor to only fund when you get proof of everything done, and do an inspection every time of that work by someone outside, instead of, I made mistakes in the past and it's cost me money because I just trusted somebody and I got
Right.
fake information and stuff. And it's like, how can they steal from you, or how can you lose money? And then
Yep.
how do you put the right pieces in place to mitigate risk with each person? And the only way to know that is to understand, what makes a good property manager, and what major metrics should you be focused on? What makes a good contractor, and what major metrics and safeguards can you put in place? And same thing with each team member. You realize, like, wow, this is crazy important to make sure this happens. And then, you realize you don't also don't have to be the operator, right? You don't have to do all the work involved in these transactions. What are some of the things that you look for when you're, working with operators, or finding other people that, say, specialize in properties, or specialize in short-term rentals or debt or different structures? When you're investing with other people, what are you focused on, with those types of people before you invest?
Yeah, well, you're right. You look at the people first, right? Then maybe after that, you look at the asset class to see if that fits your allocations and your risk factor and where we are on the cycle. But yes, you got to look at the actual person. And as I told you earlier, I'm 100% passive now. But I don't consider investing the way we talk about investing still being 100% passive, because passive to me is like you just put your money in a CD or in a treasury, and that's passive. But no, I
Right.
want to work my money, but I don't want to do the work myself anymore. So identifying the right people. I mean, there's lots of things you do on the front end. Some of it's gut, some of it's actually objective. But
Mm.
number one, what's their general reputation in your world? I mean, if you're doing this at all for very long, you and I both know a lot of people. So
Right.
even in if there's something in California, I mean, you'd be a guy I'd call. Hey, Matt, can you? And if you don't know somebody, you'll connect me. So I can find out about people just generally how they've been in the overall environment of real estate. How long have they been doing the model they're doing today? Not that they started flipping houses back in 2005,
Right.
but they just started doing multifamily 3 years ago. Well,
There's a whole nother
big
learning curve
difference.
to that.
Big
Right.
difference. So how long have they been doing the actual model? What is the track record to date? Right. So
Mm.
show me the deals. Show me. Have you run a full cycle on any of your deals? Half cycle, I'm not excited. Show me
Yeah.
the full cycle. I love people that have at least went through the last major downturn in 2008, the GFC. Again, they might have been doing a different model, but I want to know someone who's had to live through that and have some constraints on the exuberance
Right.
of a market like we were in, just even a couple of years ago in real estate. And things are a little bit changed right now with the interest rates, but I want to know that. Now, like you said, that's where I start. When we're dealing with, potentially, I say dealing with, or involving or helping other people with their money, not necessarily from a fiduciary standpoint, but just from introducing them to people,
Right.
right? Then I think we've got to go that next level. Maybe you should do that anyway. Is
Right.
background checks. All right, you just background checks, and I think that's where you're dotting I's and crossing T's. I don't
Yeah.
I don't expect people that have been in the business world, whether it's real estate or other business, to have some flawless record like they don't exist, right? I mean,
Yeah.
because things happen, and I work with people today that have been through a bankruptcy, but I want to know the story. What was the story?
Right.
How did you deal with it? Right? What happened?
Yeah.
or some,
What did you
or
do when you faced that adversity that
exactly,
occurred, right?
you know,
What
yeah,
made you a moral character when that
right,
happened? Right.
right, because again, things happen. Uh, but also, if there's anything that looks potentially nefarious, then I got to know that too. But
Yeah.
that gives you the opportunity to have a discussion, right, with a person. I ask them first, like, if, not if I do a background check, but when I do the background check, what am I going to find? Just go ahead
Right.
and tell me right now, and then I'm gonna check it. So make sure you lay on the line, and there's probably a lot of stuff on there that's negligible. I mean,
Right.
just stuff, just stupid liens that come up and stuff that you maybe forgot to pay a tax on something.
Yeah.
That's
Tax
just
lien or
BS, right?
something that someone's like, wait, I had
Yeah,
no idea that was there. Right.
yeah.
Yeah.
But those are some of the things from the character standpoint. Then when if you're investing, through, a syndication or a fund, that's where, again, you not doing it yourself, you need somebody who can help you, discern and read through those, to understand what the
Documents.
constructs are, and
Right.
how the interests are aligned between GP, fund manager, and limited partner. Are they aligned? I say properly, and again, there's a range there, but and there's this. There's so many nuances that so much language goes into those, that if things don't go exactly right, which many times things don't go exactly right, and that's not
Mhm.
a fault of the operator necessarily, but under what conditions, and where do I stand as an LP, limited partner, if things don't go as prescribed? What happens? What's the
What are your
recourse in
rights?
here?
Right.
Yeah, right.
Yeah, I think when you look at these different pieces of a syndication, right? From my, you have the operator due diligence, who they are, what their background is. There's so many times a background check would have saved my ass, if I just
Right.
would have get it in the beginning, and you learn those lessons the hard way, and then also understanding like the financial model that they put in place and what are their assumptions that
Yep.
they utilize when they're looking at their financial projections. What are their rental assumptions? What are their vacancy assumptions, delinquencies, all those different expenses, so you can gauge, are they being conservative in your eyes? Are they being aggressive in your eyes? That kind of thing. And then the market, the legal documents, there's a lot of different moving pieces that go into the understanding of how to do your homework on a syndication. 90% of people don't do these things, and they really should. At the end of the day, it's a lot of work to do that. But the benefit of it is you put your homework in and you avoid 50% or more of the deals that might go bad instead, and you can develop a passive cash flow stream to be free, and it becomes second nature. So I think the education on learning how to do the homework on deals like this and operators and develop those key relationships is probably one of the biggest hindrances to people creating financial freedom in their life through these structures. And I don't know, have you seen a big lack of this education out there for people? I mean, your Freedom Founders is focused on helping people understand those things, but have you seen most people come in green like this and not have that understanding?
Yeah, man, it's all the time, and I think part of it's part of where we are in the market cycle. You
Yeah.
know, up until like the last 18 months, certainly we've seen in commercial real estate, the headwinds because of interest rates. But prior to that, we had 14 years of just up, 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 and I think what people see out in social media and other places, or they talk to their colleague or their friend, it's like, I'm in this real estate deal, and it's you got to get in too. And it's like their friend goes,
Right.
well, if you're in it, I'm in it, and
Yeah.
nobody's doing due diligence, because unless someone is just out to commit fraud, if they're a decent operator and then just something really stupid, during the up market, everything pays out, and everybody's like, well, let's do it again. Let's do it
Right.
again. And then operators that maybe, again, worked hard, and had some early success, nothing bad there.
Yeah.
But then we've all also seen how people can get out of their ski tips, right? So,
Right.
well, if I did that well, so now I can scale. Now I can go into other markets because I just can. And
Right.
so again, you've got to be really careful when these markets are topping out.
Mhm.
That's where, if you haven't done it before, as I said earlier, you've got to really do the work, or have somebody help you do the work, or be in a group that's doing the work
Mhm.
to discern, because we're in choppy waters right now. I mean, you and I both know it. No one can predict what's going to happen next month, next year.
Right.
I think we have to be prepared for a lot of different dynamics. And how do you hedge and protect your capital and allocate it appropriately in those kind of dynamics, where I don't think we're going to get back to the old days of low interest rates and
Right.
the market's going to be fine and things are just going to rise back up again. I don't think that's going to probably happen. Now, exactly what happens? Will we have a correction? I'm not here to prognosticate any of that, just to say
Mhm.
you've got to do the work.
And it's a really hard thing to predict right now because, on one hand, there's really no choice but to inflate the currency to pay for the debts that are coming and Social Security and Medicaid and all these, the government spending. Trump spent more money last
Yep.
last time than any other president, as well. Maybe he's fixing problems, maybe he's not. And there's a lot of decisions on spending that may or may not work. We'll see what happens with the Dodge thing and the government efficiency, aspect, if that even is real or
Yeah,
not. I'm skeptical because I don't
I know.
really believe any politician anymore. But
Right.
at the end of the day, it's really hard to determine which way the market is going to go because you have inflation pushing you up and potentially deflationary items like potentially job losses and stuff like
Hmm.
that could occur that the numbers have been fudged for a long time and they're still fudged, and I think things are a lot worse than they really believe they are, and I feel like we're on a tipping edge of a potential banking crisis or liquidity crisis or something like that could occur because of the way the debt is going. And so there's a multiple black swan events that could occur. World War III potentially that is on the
Yeah.
block right now. All these different factors are so important. It's hard to gauge, hey, which direction do you go moving forward? And in my opinion, I think heavy in cash right now so you could take advantage of opportunities. Make sure that you lower your leverage ratios as best you can to weather storms on assets. Making sure that you have all of your operational efficiencies dialed in. Don't be crazy aggressive. Diversify your portfolio into different asset classes and maybe some gold and silver and things like that,
Hmm.
because real estate may not, it may be going, flat while inflation is like this. And so
Right.
if that's the case, you're losing purchasing power. Maybe if you have debt on that asset, it's helping you, gain that wealth as well. But keeping those leverage ratios in line in case there's a major rent drop or major issue where a lot of people can't pay rent or something like that, I think is important. I don't know what your take is on this stuff or what you see out there, man.
I don't think I could say it any better than you said it. I don't disagree with one thing you said, and I was trying to find something I could disagree with just to be
You're like, let's
just to be a
argue.
little testy here. But
Yeah.
no, it's like we didn't set this up before. I mean, we just said we're going to go in here and talk about things, and we'll see where it lands. But no, you nailed every aspect of it, and it tells me and tells anybody else that obviously you've thought this through, and you've said you've been through the cycles. And both of us have our war stories to tell. So when you've been through that, you've got scar tissue.
Right.
Hopefully by then we've learned a few things, and I think that's exactly the way you're speaking about the markets, 100%.
Yeah, and I think that goes back to your point about the making sure the operators that you're working with and people you're investing with in that space have seen that, because that same financial model and business model that worked during when in the up cycle
Yep.
is not the same one that's going to work during a down cycle, and you've got to mitigate those risks and buy better and watch out for interest rate adjustments that are quick and stuff like that could occur. And so I think, yeah, could people be bailed out by a reduction in rates? Yes, but I'm not sure that's going to happen. We're
That's
seeing
right.
inflation continue up, and they just slowed down on rate drops as far as their talks go and stuff. So we'll see what occurs. I hope everything drops for a minute and let me refinance a lot of
It
stuff and
just
then go back up. Fine,
yeah, give
So
me give me give me 45 days. I can get it
yeah,
all done,
yeah,
right?
just 45 days and I'm good. I'm just waiting for that time when I can be like, pounce, like 2%, great, I'm
That's
out,
right.
But,
That's right.
but
Yeah.
then, but then again, who knows what's going to happen, because if they do start seeing major job losses and stuff like that occur, but then still an inflationary market with,
Hmm.
pricing and real estate, especially if there's tariffs, a lot of things are going to go up by, just from those tariffs. It's basically a tax,
Hmm.
and maybe that's a better strategy long term because
Right.
it'll push U.S. manufacturing here to a degree. But in the short term,
Short
it's
term.
going to
Yeah.
be painful for sure, and it's going to cost more to rehab a house. It's going to cost more to live on a day to day basis. And I keep telling my wife I want to get some chickens so because eggs are going to go up in price. She won't let me yet. So we got a big garden, but trying to cut down on that grocery bill. So,
Yeah,
but
yeah, no, absolutely. No, you hit all the markers there. I agree completely with your sentiments and statements about where we stand, and I think a lot of people got excited. Almost 2 months ago, 8 weeks ago, whenever when Powell and the Federal Reserve dropped 50 basis points on the federal funds rate, which we know that's overnight rate, which
Right.
which affects a certain sector of the market. But what we're talking about, what affects us, is either business borrowers or real estate borrowers. It's the 10-year Treasury, and we saw
Right.
the contrast of the federal funds rate going down and the 10-year going up at the same time, as you said, and that's what controls. And the 10-year
The
and on
long-term
out
mortgage rate.
is what bond investors purchase that want to be in bonds for the income. But they're going, well, do I want to buy a 10-year at like 4 3/8 today?
Right.
When I'm thinking inflation is going to be out the roof? No. And bond investors are not going to buy there. Jerome Powell doesn't control that
Right.
at
Right.
all. So,
Yeah.
so
And
that's why we see the contrast, right? So we can't just bank on what the Fed and Powell does, because they have very little control. They have no control over the long end of the curve. So what they do
right.
on the short end to try to mitigate, well, even the borrowing that the Treasury has to do by issuing more bonds. They've been issuing bonds in the short end of the spectrum because no one's going to buy their long-term bonds today at the
Right.
risk premium that's being paid. So we've got some real problems there. And as you said, the volatility, I think, it's a real setup for what portends to come.
Yeah, I think a lot of people don't realize, hey, that they're not, the Fed rate drops are not directly correlated to the mortgage, 10-year, 10-year on that situation, which is more correlated with the rate changes. And, it changes outlook potentially, and then will change, the buyer's yield expectations and outlook on the back end of this too, to a degree, but not directly correlated. And so, I think it's a hard thing because you think, oh, great, rates are dropping, interest rates are dropping, but that's not
Right.
always what. And there's different markets as well for this debt. There's debt service coverage ratio debt that is not government, purchased and stuff that is affecting a lot of real estate investors and stuff like that as well. So there's a lot of different factors to consider. I'm mostly concerned about a banking or liquidity crisis or something like that. During Dodd-Frank, when they changed everything and made it so that banks technically aren't supposed to legally be allowed to be bailed out. We saw something a little different, a little while ago at the banks
Right.
level. But which, if something major was to happen, then people will own worthless shares of banks because the creditors get paid first, and the deposit holders are unsecured creditors, and they only got like 1% of the FDIC and actual reserves, which they'll just inflate everything to be able to happen, and you'll just lose your purchasing power instead. But some of these different factors concern me that they change the legality of bail-ins versus bailouts to put all the risk on the consumer as a whole versus the whole financial system. So it's a scary thing to see, and I feel like there's little things that are happening like that, and it's more important to protect yourself and invest in different ways and hold some outside currencies. I'm not a huge fan of Bitcoin or anything like that. I own some just as a diversification play. But at the end of the day, I also own some gold and silver as mostly an insurance policy if something crazy happens with currency, right? So, and it's in U.S., it's a matter of that trading of currency in relation to other countries, not just here in the U.S. So, but yeah, really interesting dynamics here to consider. But it's still crazy to see the affordability of real estate being as high as it is, or as low as it is right now, and still seeing not very much faltering in pricing yet.
Right.
Even that, not saying that, it means the demand is crazy low. So
I think overall, if I kind of put a bow around discussions of the volatility in the marketplace, the economic cycle we're in, some of the political boost that the election is giving the markets in general, particularly the financial markets. The thing I always come back to, and it's what we really focused on here today, that is hard assets, tangible assets, or whether again we look at metals. You just mentioned.
Right.
I agree. For some liquidity and inflation hedge and stability. But tangible assets, whatever you like. A business is a tangible asset. So for people that have a business, it's operational typically for most people, but at least it's something that you've got your hands on. But other tangible assets, different kinds of real estate, and you can be on the play the equity part of the risk curve or the credit side. I know you do both. So you can allocate amongst those. So there's so many ways to slice it with hard assets that it doesn't have to be the typical. What we think typically real estate is, you buy and you leverage into equities because that's where you get all the growth, the tax benefits, and when it's an up market, yeah, absolutely, that's where you typically want to be. But we're in a shaky market, so maybe it's not all go in the traditional equity markets. Maybe there's other places to slice it, and I know that's a lot of what you talk about in many of your your podcasts and a lot of the lessons you teach. But I'm just a big fan of hard assets. Not to say that people can or shouldn't put money in the financial market, but
Right.
do it with prudence and the allocations you want. I'm just a big fan of hard assets because that's where I've lived in for how many years did I? 1980. That's a long time.
I completely understand,
And
man.
it works. It works. I mean, I've been through a lot of cycles, right? And so if you do it prudently and with lessons that we've talked about today, you can ride through those. But yes, you've got to be very intentional about how you do it.
And I feel like, and what's coming in the future, what's interesting about all of this is that I think AI is going to play such a huge role moving forward. And I can't wait to get one of those robots that puts up drywall for me and stuff like that, but and does all my laundry and all that kind of stuff, of course. But
It doesn't file a workers' comp claim on you because they.
yeah, exactly. Especially living in California, so I got to be real careful about that here. But
Right.
at the end of the day, I'm seeing a lot of different changes occur on the AI side, and some potential benefits, like especially on the marketing side of things and automation side of things, and being able to streamline processes and procedures. What are you seeing out there right now, or what do you think this is going to do to the market as far as changes going forward with regard to implementation of different technology and automations and things like that?
Yeah, the world of AI is, it's more than I can wrap my head around, quite
For
honestly.
sure.
I mean, and I think for most people, it's just like we're still at the beginning stages, but we've seen, in the last just, year and a half, how much it's already seeding its way into many different industries and many different capabilities. But yes, I think the efficiencies in so many respects, and as you said, from marketing to data analysis, I mean, just the amazing speed and efficiencies that AI is going to bring to us across the board. It's probably just hard for us to fathom right now how we'll
Yeah.
see the world and what we're doing in just a matter of like the next couple of years. And usually in generations past, it took a generation for anything to change. It took
Right, right.
it took like 20 years. It's like, oh yeah, we went from the old microwave to this really fancy microwave. Like, wow, that's a big up. It's just, and today it's like, microwave, what the heck's that? Fax machine, what's that? I mean, that stuff was the time was like really innovative. And today it's like we're just changing at light speed. It's really hard to keep up with it all. I guess it's
What's
exciting
going to be
times.
what's going to be most interesting, I think, is the how much the cost is versus the replacement of that long-term investment, right? So, like, if you're talking about replacing labor and you're thinking, one-to-one ratio, if it costs $30,000 for a robot and you're paying someone $60,000 a year, like, I'm a little concerned with what's going to happen there. I'm also excited
Yeah,
about it from a business owner standpoint.
right.
I love my people, and I don't know that a lot of people couldn't. Robots may not be able to do a big chunk of this, But from an automation, I think we'll be able to gain more and get there to our goals way faster utilizing these techniques. Just on the marketing side alone, for example, I could upload all of my previous content, video content, everything up to ChatGPT and create a custom GPT about
Mm-hmm.
everything I've ever said, right? You can go through and throw your own content up there and get suggestions on things that you want to adjust and change for proper optimization. And like there's so many little things just on the marketing side alone to do. Now you can even build AI bots of yourself talking on a podcast like this, where it looks like you're talking and you're not. I promise everybody, this is not
I
an
was just going
AI
to ask
bot
you, I
here.
mean, are you the real man Owens
Yeah,
or am
this
I?
is real. This is real.
Yeah,
So no, but it's just interesting to see what's going to happen, and
yeah.
I think it's kind of open to what people's imaginations are going to be in the future, and that's pretty exciting, but also scary, because of the change and how fast that change is going to occur and the potential dangers that will come with that. So. But this is why I want my farm in the middle of nowhere out in Texas somewhere, so I can just be away from people if I need to.
Good idea. Good plan. Good plan.
Yeah. So, well, thanks so much, Dave. How do people get a hold of you if they want to get in touch with you or get involved with Freedom Founders?
I don't know if I want people to get a hold of me, but
Okay. Yes. Yeah.
I
How
try
do
to
they
keep a little
put their contact information
try
in
to keep
your
a little
database?
distance, from but no, yeah. Well, my website, if people are interested, is freedomfounders.com. Like you, Matt, I've got a podcast. It's Freedom Podcast. YouTube channel where I put a lot of blogs out, just Dr. Phelps, Dr. Phelps. So, and I've I've authored a few books just because I like to do that over the years. I've got a few books out on Amazon, so it had to do with some of the stuff we're talking about, but kind of building a freedom plan, hard assets, different subjects that kind of been fun to delve into over the years.
Awesome. Well, thanks, man. I appreciate it. And if anybody needs a due diligence checklist on how to do some of the homework on some of these operators we're talking about, on the show today, you can go to my website, MathewOwens.com with 1T in Matthew, and we have a 200-point due diligence checklist that you guys can download for free from our site. So thank you very much, Dave. Really, really appreciate it. And I will talk with you soon. Look forward to talking to you again about the investment stuff, man.
Absolutely. Thank you, Matt.
Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. 3 of the key pillars to becoming a successful real estate investor. Number 2, you can join us on our mailing list where you'll get tips and tricks on real estate investing directly to your inbox. And number 3, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.